Alright guys, so let's talk about de-dollarization today. Now we are witnessing a bifurcation of not just global trade, but currency systems as well. Now when Washington launched their trade war, it just reminded the world of how unstable the US-led order is. Everything can change in 4 years. Actually scratch that, everything can literally change tomorrow. And that's how volatile the new trading regime is. And at the receiving end of the biggest punishments is China. Now, the situation today has devolved into a did he call or didn't he call kind of diplomacy.
Discussions. China's embassy just said they are not having any talks on tariffs and that the U.S. should stop creating confusion. Now, just a bit of a reminder, this Time magazine piece came out literally at 6 a.m. this morning. It was an interview with President Trump. That interview, though, took place apparently on Tuesday. So here we are on Friday. The one thing that has been consistent thus far is that China, at least publicly, has said that there have been no talks.
Now imagine you are China. If the US can lie about such a thing, you have to watch your six. There's no guarantee that the tariffs would ultimately come down. US-China trade could decouple forever. And in the same breath, there's also no guarantee that China will be allowed to use the dollar system forever. Big institutions like SWIFT and Wall Street, they are ultimately heavily influenced by Washington. And there's a reason why China issued US dollar bonds in Saudi Arabia last year. They tested how trusted the economy is, and the results were overwhelming. Beijing sold $2 billion in dollar bonds and received $40 billion in demand, and this allowed China to borrow at almost the same rate as the US Treasury itself back then. Despite the narrative of China collapsing, the global economy as a whole trusts China more to pay back the debt. This is a very important test that shows China can access dollars even if trade with the US grinds to a halt. It gives Beijing confidence to continue the financial and the economic decoupling with Washington. Now, in addition to that, China has been issuing even more debt to the world. Both Chinese companies and the central government themselves have been tremendous issuers of bonds. And here's how crazy things have truly become. China has issued nearly half of all dollar and euro bonds in the emerging markets, which is around $7 billion worth. And when Beijing borrows money, when they issue bonds, they are able to borrow capital at a cheaper rate than the US Treasury itself. In other words, investors trust China's economy more than the US, and that's why bond yields are 26 basis points lower than America. Even South Korea has to pay more than the US or China to borrow dollars from the world. This is a recognition that China's economy is more resilient and even more trustworthy than the historic issuer of US bonds themselves, which is the US government. There are all sorts of implications here, and this means that should things escalate, China won't be starved of dollars even if they need them in trade. But more importantly, China can actually starve the US of capital. If the Chinese economy keeps growing, they could actually keep borrowing money at a lower rate than the US itself. And thanks to the tariff war, China is now forced to boost their own domestic consumption even more. If we look at Beijing's bond issuance so far in 2025, the trend is clear. China is raising a ton of capital through regular and special RMB debt sales, and the amounts raised are getting progressively bigger the more the US escalates the trade war. This is money going directly into the Chinese banking sector to encourage more loans. It is money used for stimulus for both consumers and their local governments. But pay attention to the rate at which China is borrowing at. Yields on their 5-year note is only at 1.45%, while the 5-year Treasury in the US trades at nearly 4% yield. Beijing can borrow money almost 3 times cheaper than the US, and the markets recognize this. And that's why even in the euro-dollar markets, China is able to get capital at a cheaper rate than the Treasury itself. It's more confirmation that China won't fold their hand anytime soon. And why is the US borrowing money at a higher rate? Well, the trade war has rocketed global confidence in US growth, and the threat of confiscation is also always there. And even Scott Bessent admits that the current system is failing the US. Now, during the Global Finance Forum, he basically called for a grand reset of the entire monetary order.
Of the Bretton Woods institutions. Yet everywhere we look across the international system today, we see imbalance. The good news, it doesn't have to be this way. My goal this morning is to outline a blueprint to restore equilibrium to the global financial system and the institutions designed to uphold it.
Now, China knows this is happening, and while the US plans their reset, Beijing is also doing the same thing. Now, sure, the Chinese, they are buying gold, they are also settling trade in bilateral currencies. But in addition to those, China is also planning to supercharge their own payment system. Now, Beijing is moving to aggressively expand their cross-border interbank payment system, or SIPS. It's basically the Chinese equivalent of SWIFT, and this would be a big headache for Basin and France. If China moves away from SWIFT, there's no idea how much trade will be done in RMB and not the dollar. The transactions will be quite opaque, not exactly a good thing if you like to track China's progress. Even within SWIFT itself, China's RMB is getting more market share and trade, and when it comes to financing deals, the RMB share as a global currency has beaten the euro. It's now at 7.4%. Sure, it's a far cry from the dollar at 81%, but this is just a SWIFT system. A lot of Chinese bilateral trade is de-dollarized to a very big degree. By rolling out the SIPs, Beijing will be able to push out more RMB trade and get partner countries to ditch the dollar as well, and it makes things even more enticing as the dollar remains weaker. Right now, the dollar weakness can be seen as an event-based shock. Trump's tariffs has basically pushed it off a cliff, but as China continues to roll out alternative systems, they are looking to make this change more structural, a global shift that will continue for years and decades to come. Now, the USD has dropped by nearly 10% so far this year. It's worse than any other precedent in the first 100 days since Nixon. And as we mentioned before in a previous video, the key pillars of dollar strength are being dismantled. And that includes trusting US institutions, low trade and capital barriers, as well as a predictable foreign policy. And over the last 4 months, all those have been set on fire. And trying to do a U-turn today would be exceedingly difficult. And the first step would be, of course, to reverse the trade war. And the White House better heed the warning, because within the US economy today, things are looking exceedingly bleak. The consumer just isn't in the mood to spend money. They will be hunkering down and hiding in a bunker. The Michigan Consumer Survey for April has been finalized, and that reveals a complete collapse in confidence. Sentiment is dropping back down to the 2022 levels when US GDP actually went negative for 2 quarters. Now, that was technically a recession, but Biden redefined it away. And why is sentiment collapsing? Because long-term inflation expectations have flown to a 24-year high. Americans expect inflation for the next 5 to 10 years to hover at 4.4%. This is a very big jump that shouldn't be overlooked. People buying less stuff is an obvious fallout anyone can see. However, there's a bigger storm that's brewing in the immediate future. And just think about it. What is worse than having no money to buy stuff? It might just be having no stuff left to buy.
We are also reporting today that a group of CEOs of the top American retailers, Walmart, Target, Home Depot, and Lowe's, had a private meeting with Trump on Monday. They had plenty to say, but there was one warning that stuck out. Empty shelves, they said. Empty shelves in American stores as soon as this summer because of Trump's actions.
And I am told that business leaders, the Business Roundtable and others have been reaching out to White House Chief of Staff, trying to get a meeting with the president, trying to convey to him in real terms the real fallout of some of this uncertainty, some of these tariff policies. And it was that empty shelves comment, we are told, that really caught the president's attention. Of course, you can see why. The whole idea that we would have an interruption in the supply chain, sort of like we all saw in the pandemic, simply because of his policies, is something that would be difficult for the White House to endure.
Now, a few days ago, we had reports that Trump went to meet with the top brass in Target and Walmart, and it was more of a warning actually. Should the trade war continue, there could be more empty shelves across the US. Now, is this fear-mongering by retailers or realization that the US still depends a lot on imported goods? And we have headline after headline telling us that Trump has very little time to de-escalate the trade war. Product shortages and empty store shelves loom with falling shipments from China. That's from NBC News. Empty shelves and layoffs loom from US-China trade collapsing, economist warns, from the Wall Street Journal. And do you see the common theme here? The brutal tariffs of 145% on Chinese goods are backfiring in real time. Now, a week ago, Trump gave big exemptions on Chinese imports, and those included smartphones, computers, and semiconductors, critical inputs for US industries, and big ticket items like iPhones for the consumer. Now, those exemptions were good and realistic, but apparently they aren't enough because the day to day existence of Americans still hinges on affordable Chinese imports. And now that Trump has hiked the tariffs to crazy levels, everything has become unaffordable. Chinese suppliers can't make money, so they simply stop exporting to the US, and that's a gigantic problem. And here's the crisis in one handy chart. Despite the exemptions, a ton of products are still subjected to the crazy tariffs. Nearly $50 billion in manufactured articles, 43 billion in textiles and apparel, and 18 billion in furniture amongst many others. A lot of this stuff are sold in US retailers, and just in Walmart alone, 60% of their imports are from China. Even the price of toys and clothing will be rising much higher than before. And how is this a win for the man on the street? It simply isn't. What Trump just did was to cancel a ton of cargo shipments from China to the US. Many ships and planes of goods have been suspended because it just doesn't make any economic sense anymore. Importers won't buy the goods because there's simply no way to pass down a 145% tariff to the consumer. This is unthinkable. So the threat of empty shelves isn't an idle one. Can the US reroute supply or conjure a ton of goods to replace China? I doubt that is even possible. According to Apollo, there's now a dramatic decline in containers departing China to the US. Capacity has fallen by almost 50% in a single week. The data tells us everything that we need to know. The longer this continues, retailers simply won't have enough stuff to sell. And when you have demand relatively constant and supply dries up, you get higher prices. The same amount of money chasing fewer or zero goods, and you get the idea. And make no mistake, the dependency on Chinese supply for every item in the category is very real. And this chart shows us the amount of US reliance on stuff made in China. And the higher up you go, the greater the reliance. 90% of microwaves imported into the US came from China. The same goes for lamps, video game consoles, and electric fans. 75% of toys, kitchenware, and the majority of textiles are all made in China. Good luck trying to replace those in a hurry. Now, will there be mass shortages in the US? I hope not. But as the days go by without resolution, the threat becomes more real. So hang tight, guys, and brace for impact. But let me know what you think. Can China keep borrowing cheaper dollars than the US? And will there be even more shortages in Walmart soon? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.